We specialise in protecting, preserving and growing your wealth. Black Tower Financial Management, the team you want by your side. Visit blacktowerfm.com.
Talking to Christina Brady from Black Tower Financial Management every other Tuesday, unless we tell you otherwise. And we're talking about banks in just a moment here. But I would say we start with the sort of global picture and then bring it down to your personal finance bits and bobs, including pensions. Something you just wanted to mention quickly.
Yeah, the UK government has got to decide soon about what to do about the triple lock on state pensions, and specifically what raise that state pensions should get each year. Now, usually it's calculated in the 3 months from May to July. And if you look at that, the earnings component, because earnings have gone up, was increased by 8.5%. But what they're saying is that during that time, there was one-off payments to NHS staff and civil servants, which made that figure spike and made it higher than it should have been. So what they're saying is that they may change that, and they may make it so rather than it being, earnings component, they're going to use the regular growth in the 3 months to July, which would mean pensions would only go up by 7.9% next year rather than 8.5%, which would save the UK Exchequer about, I think, 1 billion. So I think it's safe to say that this option is under consideration by the UK government. They're always looking at ways to reduce the amount they have to pay in state pensions. And this is one way they could do it. They could say, look, this figure was artificially high because of these one-off payments. If we strip those out and we just look at regular growth, you're going to be getting over 0.5% less at 7.9. So that should be announced soon. So let's wait and see. Okay. But if they can get away with it, I think, they would. No matter what government's in power would do the same because they need to save money. Unfortunately, that's at the expense of pensioners. I know you got a nice large rise last year, but that still wasn't as much as inflation on core things like energy and food. And we were hoping that this year you'd get at least 8.5. Now it looks like it could be 7.9, which maybe doesn't sound like a lot, but it is to some people. It can make a difference. So just to let you know that that's up for discussion at the moment. Okay. That was just something I thought I needed to mention.
Yeah, just a reminder for people, people like me, the triple lock, it's still in place. And what does it involve? You get the highest rate of 3 different
You get the highest rate,
scales.
Yeah. You get 2.5 or the higher of CPI or wages growth.
Right, there we go. That's it. I knew 2 out of 3.
So at the moment, obviously, wages growth was higher. So that's the figure that would be taken.
And if we get onto banks then, we were talking about investing, maybe a large sum, but you always say keep a little bit back to play with, just for cash transactions and the like.
Not just to play with, but for a contingency fund. So say your car needs work on it or, some people need a knee replacement and have to wait. In Spain, it's not that bad, but say you had to wait months and you wanted it done sooner, you could pay, or you've got something wrong with your eyes, like cataracts, and you want that sorted. Or you just need to go and visit family. You've always got to have some money behind as a contingency fund, but the rest of it should be actively working for you, if at all possible.
Okay. And as far as banks go, where are we at then? Because I get this sort of impression that it's just really hard to open a new account these days. I'm sure it's not the case.
In Spain, everyone has the right to open a bank account. So in Spain, but in the UK, as we know, that is not the case. And if you are a certain person or people and you've upset certain people, your bank account could be closed or you cannot open a bank account. But in Spain, under law, everyone can apply for a bank account. But at the moment, we've seen, the rise of online banks. So I think the main ones I hear about are Wise, Revolut and N26. Yeah. And people come to me and say, and there is a huge difference between them. I think Wise, people forget it is not a bank. Okay, because someone came in today and said, Wise is offering me 3 point something on my deposits. I said, yeah, but that's linked to a fund run by BlackRock. And also Wise is not a bank, so it's not covered by the FSCS protection, by banking protection. Okay. What it does is it invests your money in low-risk liquid assets, so money market funds run by BlackRock and State Street. It's based in Estonia, and Estonia does guarantee up to 50,000 euros if you're based in Europe. If you're in the UK, you are not covered. And someone came to me and said, I've got a Wise account because they don't report it to anyone, so I can keep my money there and it doesn't come under this international reporting thing where all the banks report. That is wrong, okay? It reports to the tax authority in the EU and the UK if you have accounts. So what it does is it reports it to the central bank in Estonia, and they report it on to authorities in the EU and the UK if they are asked to. So it is not under the radar. It is not somewhere where you can stash money that you haven't declared and they'll never find out. All banks, all online investment companies, anything pensions, all agreed to CRM, which is common reporting of all assets held by people outside their country of residence. And that was agreed 2 years ago. And it is reported by the central banks in a data dump to the various authorities every year. It's up to the authorities whether they act on that, but it does happen. So that's Wise. It's not, officially a bank. Then you've got Revolut, which is out of Lithuania. And that, again, doesn't report directly to the EU and UK. It reports all accounts to the tax authorities in Lithuania, and they are then responsible for sending this information to other countries for tax purposes under the Automatic Exchange of Financial Information Act. This is protected in the EU, and it's regulated as a bank. So it's guaranteed up to 100,000 by the Bank of Lithuania. Okay, and in the UK by the FSCS. So that is something, you've got to remember. There is a difference there. And then you have N26, that's German. So it's a German bank operating in Spain. Again, that's guaranteed up to £100,000, and that's under the EU scheme. So that's guaranteed by the German deposit scheme. Obviously, Revolut is guaranteed by the Lithuanian deposit scheme. Of the two, obviously, Germany is seen as being more robust, but at least they're both regulated and they are both offer you some form of protection if anything does happen. Also, I come across a lot of people that have accounts or investments in the Isle of Man. Now, the Isle of Man people think is part of the UK banking system. It's not. It's got its own separate rules. Okay, so if you have an Isle of Man account, that is only guaranteed to 50,000 per person, whereas in the UK, if you have a bank account, it's 80. I think it's now 85,000. And it's 100,000 per couple, and that is guaranteed by the Isle of Man Compensation Board. So there are differences, and I think people need to remember that. And all these banks are signed up to the Automatic Exchange of Financial Information Act, and that means that they report their positions for people who are non-residents to the central bank, wherever they're based, and that central bank can then report that to, say, Spain, France, wherever these accounts are held, and then it's up to those countries as to what they do with that banking information that comes through. So at the moment, in the olden days, it was very easy to have a bank account and stay under the radar. Nowadays, it's near nigh impossible unless you go to a few very obscure countries in the world where, personally, I wouldn't be putting my money anyway. Right. You saw what happened with Panama. All these rich people thought they could get away with it. You had one whistleblower. It all came out. It happened to HSBC, happened to Credit Suisse. And I think you've got to remember that. And people who think a cashless society is a good idea should think again, because once there's a cashless society, if you upset any of these authorities, you will find that you will not be able to access your money in any bank account anywhere in the world. At least now, if you have cash, you have a backup. Say if a banking system goes down, or if for some reason you are blacklisted, you have cash that you can still go out and buy things. If that changes, that will not be possible. And we've got certain instances in China where this is happened, and basically people have been left to starve and cannot travel, cannot get jobs, cannot do anything because it's all electronically controlled. So, when you see this, cashless is best, it's best for the authorities, because then you cannot do anything without them knowing. They will know exactly what your tax position is. They will know exactly what you're spending your money on. So if you spend your money on a luxury car and that they look at it and they think, well, you've only got a job as this, how can you afford that? Right. They can come down on you on a ton of bricks. So I think people need to push for cash and to use cash more. But as I said, be very wary when you are going onto the online banks. Make sure that they fulfill the needs you want. And as I said, some of them are offering interest on their accounts, but you've got to remember that isn't a guaranteed fixed interest rate. Okay, that is invested in low risk liquid assets. And at the moment, money market funds are doing well because interest rates are high. Once interest rates fall, the rate they're going to offer is going to fall substantially as well. So you may go back to getting nothing on those accounts. Okay, it's not guaranteed. So just be aware of that when you invest in or put your money in these places.
Yeah, interesting to know because they're doing very well. N26 and Revolut, I think, are kind of neck and neck as far as popularity goes. But good to know from yourself that you've got that sort of coverage and security, as it were, with the
you do need that security because we all banking Lehman Brothers too large to fall. It fell. Morgan Stanley was on the verge of failing if the American government hadn't bailed it out secretly. So no bank is too big to fall. I think that's what you've got to remember. Therefore, you need to make sure that you have certain guarantees with your account and certain protection for your money.
Yeah, and you can put cash into those accounts.
Yes, you can.
At the ATM, yeah.
Yes, you can.
Yeah,
you
so
can feed it in at an ATM,
or
you can transfer it from another bank account. But no, I think that's something that people, you do need to take into consideration. As I always say to people, it's your money. You have got some responsibility for making sure it is as safe as it can be, and it's invested in a way that meets your needs. Now, what people want and what people need are two completely different things. Everyone wants to be a millionaire, but everyone needs just enough money to be able to live. So you've got to marry those two together. And obviously, there's got to be some compromise. Not everyone can become a millionaire overnight. But again, as I said, it's your money. Most people have worked very hard for it. If you've inherited it, your family have worked very hard for it.
Yeah.
Therefore, make sure it's put to the best use possible.
Listening and exceeding expectations for over 31 years. Black Tower Financial Management, the team you want by your side. Visit blacktowerfm.com.